Why are S&P 500 futures edging higher today? This matters because it reflects investor sentiment about the economy and inflation. Just 6 hours ago, U.S. stock futures saw a slight increase, with S&P 500 and Nasdaq contracts rising about 0.2%. This uptick comes after a mixed performance in previous days, where investors were cautious as they awaited key inflation data on September 10, 2025. During that time, Dow futures dipped slightly while the S&P 500 and Nasdaq edged up, pointing to a cautious optimism in the market. The reason this is significant lies in the broader economic context. Analysts at Vital Knowledge recently noted that indicators of private employment and business activity were showing darkening storm clouds ahead, suggesting elevated inflation. However, today's positive movement in futures could indicate a shift in expectations, as inflation concerns seem to be cooling. This is particularly evident with falling bond yields, which typically signal investors are less worried about inflation. So, how does this all work? The S&P 500 closed higher on Monday, driven by easing geopolitical tensions and a recovery in technology stocks. As tariff uncertainties continue to loom, investors are finding some relief in the latest economic indicators. E-mini S&P 500 contracts rose about 0.05%, reflecting a subtle but significant shift in investor confidence. With investors focusing on these falling bond yields, the market is reacting positively, suggesting a potential stabilizing effect on the economy. For everyday Americans, this could mean a more favorable environment for jobs and investments. If inflation expectations continue to cool, it could lead to more stable prices for goods and services, positively affecting household budgets. In summary, the uptick in S&P 500 futures today reflects a complex interplay of factors including investor sentiment, inflation expectations, and geopolitical events. Understanding these dynamics is crucial for making informed financial decisions. Subscribe for more explainers.